Good evening, one and all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Thursday, January 13th. Can you believe we're halfway through June? I mean, we're just going to get into summer, which I love, but then my brain immediately goes, oh, God, fall's right around the corner. I don't like that, but we'll see. But here we are, going to be a crazy time. We're getting into the heat of summer. It's going to spread, by the way, right now through the U.S. I'll keep my eye on natural gas. Now, it had a big rally because of what went on out west. You eased a bit there. You're not seeing on the papers everything. You are seeing the storms in Florida. I can't imagine it. I had a home in South Beach in Miami, and I know what those wet roads can be like. I'm telling you, you could walk out. I remember it. And the water was up in the street to my knee. Does that give you an idea of the size of the flooding? Nothing can withstand it because you're basically on a man-made island that just doesn't have any water retention. It's really unbelievable. So I can imagine just how bad it is. My heart goes out to everybody there. It goes away. That's the good news. And from what I'm seeing, all the millions they've spent didn't do the job. And if you've been to Miami, you saw how much money they spent on pumps and everything to keep the water out. Doesn't look to me like, well, on the beach at least, it didn't work. I don't know what happened in Miami proper. When I take a look here and looking at everything on the energies, okay, still coming down. But what's going on here and why did this happen? All right. I think we have to go to the bigger story, which was the PPI this morning. It was down 0.2. The market expected down 0.1. You didn't get the inflation scenario. So a couple of things now. CPI weakening, and all of a sudden PPI with it. One of the things we had is one would go up, the other down, and we'd be looking for weak spots in it. And suddenly, maybe, just maybe, we're finally getting to that part because jobless claims also rose both in the weekly and continuing weekly. And the continuing weekly is now well over 1.8, 1.82 to be exact. And that's interesting because this is now a little longer to get a job. So are those jobs still out there? Well, they're probably not in the big way. You hired for spring. You're still in spring. Summer workers have been hired. The outdoor restaurants are fully staffed. They're not, I don't see any for hire signs around my neighborhood, and they were all out there before, and they're all gone that I can see. Construction work is fully at work wherever it can go. The workers are already hired. So it's getting harder. That doesn't mean JOLTS is wrong. There were 8 million offers, but obviously somebody's not picking these workers up. That's my point. So falling inflation, a little bit rougher of a labor market, exactly what the Fed wants. And remember something, when you get what you wanted for those rate cuts, there's a reason. It's because the economy is slowing down. Be careful. You get what you want. Now the Fed has to start pulling the reins to stop a nosedive, and they rarely do a good job of it. Adobe up today after hours 16.5%, and Tesla. Mr. Musk won his vote. Now, for the morning, you're going to get the Import-Export Price Index and the University of Michigan's preliminary June consumer sentiment. That'll be an interesting number when we get to it. And when you look at the day, in the evening at least, down in some of the indices, the ones that are the weakest are still sitting here in the Russell 2000 and sitting in the Dow. Metal markets all got hit today. They're trying to stabilize right now. The dollar out of left field, and I cannot answer to you why it did this, but it was up 57 points. That's a big rally, and this market's proving it can hang in here near the 105 area temporarily. But when you look at the chart, you see you're just whipping back and forth between the upper and lower Bollinger Band. A little bit of a rally going on in the soybean market and the corn market. You got hot weather coming through the Midwest, so they're putting in some bids going into the weekend, but it still looks overall to me, and especially in the beans, still bearish. Bonds and notes, well, you're sitting here at 4.25 on the 10-year. Weren't we talking to traders just recently saying you were going to go to 6%? I got to tell you, if CPI is falling, PPI is falling, and you're getting jobless numbers that can start galloping higher, you're not taking up interest rates on that. What we have to control eventually is the debt. because what it's doing is every time they're putting out these auctions, they're sucking the money out where it can go somewhere else, and we have to do something as the American people. We cannot just keep going forever and spending, and I see Trump wants to again come out to buy votes. He's throwing out crazy tax packages again. I don't know. I just don't know. On the mini weekly S&P, if you were to finish right here, you're up 1.5%, a new all-time high. You can't fight that. When you look at where you're at, you've gone into a stall, but remember the other chart was of closes only, and this, you've gone into a bit of a stall right now. The pattern has been one of higher highs, higher lows, which is bullish. We have stayed over the 18-day average since literally the beginning of the month. Here we are getting into halfway. We've had a nice rally. Where's the resistance? It's going to be the Bollinger Band. And you're on it. That's why you're having trouble rallying any further. You only stay over that 5% of the time. Now, you didn't have a lot of real tight sideways action to run from, but this market has been able to run without that. You didn't have a lot of real tight action here either, and you were able to move up. So I don't count that that's the case. When you finally did get more sideways action, you had one break here, right? And that was the last time to buy this market, by the way. If you just look at it, it was a challenge of a major moving average to 100, and it kept going. Traders are focusing, for whatever reason, on how far the S&P and the other indices are getting over the 50-day average. So you might want to take a look at that. I'm hearing more and more talk about that. You have an embedded reading. What do I teach you? If you've taken my enhanced Bollinger Band course, that's the most bullish signal you can have until it's lost. When it's lost, it says prices often revert back to the closest main moving average. That simple. The NASDAQ, bullish as can be, 3 days over the upper Bollinger Band, then embedded. So I can see the strength there, but look, you're going to get into the weak markets now. In the Dow, gee, let me think about it. Oh, I know the problem here. Darn it. They don't have AI. It's not heavily weighted that way that you are. So you've got big resistance. The 100-day average had a bearish crossover with the 18. The 18 got under it, and the market is breaking down ever so slowly. Now, can these really diverge that much? I don't think so. I think they can go only so far, and then we'll see what happens. Rallies back up will still have, in my opinion, a lot of resistance there, but it's not a trend yet. Same thing is happening in the Russell. It too rallied back to the 100-day in the green, and the 18 couldn't go anywhere, falling back. Will it get to the lower Bollinger Band? Well, you know, over the weekend, we're going to get the weekly chart, so you're going to be able to play with that with me tomorrow. So we'll take a look and see if they give a different picture. Then we get to the bonds and the notes. If you don't call that friendly, I don't know what is. Is it overbought? Absolutely. Is the market, as you can see right there and here, over the 100-day average up to the Bollinger Band? Yep. Is this the first time you've been over that in a long time? Oh, yeah. Does it often then require you either keep feeding the bull or does it pull back on you? Oh, yeah. You need to embed to get this bull market to continue to run. It's not there yet. Same in the 5-year note. You're up to the resistance of the 100-day average and the Bollinger Band. And you'll say, well, I'm over it. That's how it works. You don't have to just go to the number and stop on a dime. It's all about a zone. And you're in a zone where, because you're overbought, it's hard to say in this market, hey, I'm going to go in and I'm going to buy this market here because interest rates are going to fall another 25, 50 basis points. That's what you're saying. The dollar didn't care. This market's caught between upper and lower Bollinger Bands. The guys buying the upper band, they're getting killed. The guys selling the band, they're getting killed. It's the flip-flop. It's not a trend trade. It's trying to be with today's action. You do have higher lows, higher highs, but you're instantly overbought. I love currency trading. I don't like it like that. And the flip-flop's true in the euro. You can see that. So what next for the Brits? Well, if the U.S. is talking, and they are, you know, the marketplace is talking. Let me make this clear. The Fed is not talking of cutting rates soon. The market is. The market is building back into September. Cut. Okay. I heard other people talk about September, November, why not? Okay, that's what they think. Well, you need the economy, as I said, to get 3 periods of numbers where they're weak. I think you can put the month of May in that because of PPI, CPI, and the early projections on the PCE are that they're going to come in on the weaker side too. Goldman and others have already put out their projections. I put that in my reports earlier. In Bitcoin, bearish right here. Now you've got the sideways action. You have to either break out of this to give us a new trend or you bounce around. Right now you're down to the support and you're oversold, but the trend is clearly down until you take out 2 days ago's high, as you can see there. When we look at the energy markets, the battleground is the differential of the 18-day average right here. You can see that on the chart. And when we look at the market, what you did is you rallied back up to the resistance of the 100-day in the Brent on a vertical rise. Now, you've had 2 moves. A vertical price break. It just peaked out up here and kept going down. A move back up, a little more than about 2/3 of that move was recovered. And now the market is sitting here wondering, what is my next step? It is not trending at this point. And the identical thing is happening in the WTI. When we get to the gasoline, you bounced away from the lower band. The market's corrected, past tense, an oversold condition, and it's fighting for direction against the 18-day average. Which way does it want to move from here? But that has been the resistance point. And in that gas, I have been expecting a pullback. As I said, first challenge of the Bollinger Band should give it, but you're locked into a bull trend still in this market. I look for support 283 to 279.5, and I wouldn't be surprised tomorrow if the pros come out and try to buy that. Now, I want to remind you that what's going to happen here is tomorrow, am going to announce our Father's Day sale. So I'll tell you what you get. Look for it to be announced in the morning. Emails will be sent out to those of you that are appropriate to get this. We have you on a mailing list as well, and you'll be able to buy it right through the websites. But we'll talk about that tomorrow. In the meantime, if you want any of our free offers, go to iraepstein.com. Free offers. It's all waiting for you, and I'll see you all tomorrow morning. Take care.